Hi everyone, JJ here. Welcome. Well, today I'm going to look at ARM Holdings. The stock's been on a meteoric rise. What's going on? And is the possibility of a crash when a stock goes this ballistic? Of course, Nvidia has done the same thing. Is it just following in its coattails, or is there something to it? Let's have a look. Let's dive in. So first of all, let's look at the stock chart here. Right below me in the video, we can see in one day, just in this last day, it's gone up 29.3%. After hours, it's down 3% at the moment. But if we go back 5 days, let's have a look at the 5-day chart. It's up 98.63% over 5 days. So, of course, earnings came out and people got really excited. The market got excited. Is this AI exuberance going on here? Is there a bubble going on, and will it crash? That's what I'm going to dive into today as much as I can in the 10 or 15 minutes. It's up like over 100%, 110% at this point in the last week or so. So it's had a huge run. And so what's going on here? Let's have a look. First of all, when I look at a company, I want to see what it does. It's very important. Traders often don't even care what it does. There's that famous video on CNBC of that guy who was asked what Upstart does, and he kind of said, "Oh, I can't hear you. I'm losing it." He could have just said, "I'm a trader. I don't care what the company does. I'm just going on momentum," but he didn't. It was kind of transparent that he didn't know anything about the company. ARM Holdings PLC architects, develops, and licenses central processing unit products and related technologies for semiconductor companies and original equipment manufacturers rely on to develop products. It offers microprocessors, systems, intellectual property IPs, graphics processing units, physical IP, and associated system IP, software tools, and other related services. Its products are used in various markets such as automotive, computing infrastructure, consumer technologies, and the Internet of Things. There's a growing use for these in different sectors and different industries, from EVs, to the Internet of Things. Over recent years, the use case has expanded greatly, and we saw this with Nvidia as well, with AI in particular. That's what the hype is about now. This is from the company's website, their own description. It says, born more than 30 years ago, the goal of designing a computer intended to run on a battery. ARM's DNA is built around power-efficient CPUs, so CPUs rather than GPUs. So the excitement for Nvidia was around, feeding into AI, or the infrastructure for AI, and this is CPUs instead. Today, ARM compute platforms are the most power efficient on the planet and continue to push the thresholds of performance to enable the next generation of smart, AI-capable, visually immersive, and increasingly autonomous experiences on everything from the tiniest sensors to the smartphone. Another use case, of course, has exploded: smartphones to the automobile and to data center. So data center, cars, smartphones, Internet of Things. There's definitely growth here. But has the market got a bit out of control, a bit out of whack here at the moment? This is Ticker Terminal here. I'll leave a link in the description if you're not familiar with it to check it out. What I like to look at for any company and stock as an investor is the holders. Who are the investors in the company? And we can see here that SoftBank Corp is a massive holder. It shares outstanding of over 90% of the shares outstanding held by SoftBank alone. We can see down there some familiar names: Citadel and Goldman Sachs, the usual suspects. Alphabet is interesting. They own 0.19% Alphabet, so they've got a stake in it worth $225 million. Look at SoftBank's holding. It's a huge holding there. Are they going to be selling out? That would be interesting. Could that make the stock crash if they sold too much? Now, if you're getting value out of this video so far, I'd really appreciate it if you hit that like button to help spread it to more people. Thanks. I'd like to see who are the investors, the well-known investors who are invested in a company that I'm looking at. I'll leave a description to this site. It's GuruFocus in the description as well. I use it all the time. You can see that Ken Fisher had a new buy, in the last quarter of 2023. You can see Paul Tudor Jones, who's a trader. If we like, these are traders who will go in and out quickly. So maybe that's telling. George Soros as well, known as obviously one of the most famous traders in the world. Ron Barron, he's a kind of a long-term tech investor, famously invested in Tesla and SpaceX and Elon Musk companies. So these are new buys going back to the third quarter of 2023. And we have Chase Coleman, Stephen Cohen, another trader, another well-known trader, billionaire trader. These are the kind of investors that are investing. Ron Barron has got Current 700 shares, so not a big holding there. And this is a recent article from TechCrunch. ARM's gains are SoftBank's gains, talking about that SoftBank holding. Not so long ago, things were looking bleak for SoftBank. They were in 2022 in that bear market. Things were not looking so good. It says the Vision Fund, SoftBank's venture arm, posted a $6.2 billion loss in Q2 2023 tied to WeWork and other unfortunate bets. But thanks in no small part to chip design house arm SoftBank's fortunes appear to be turning around. So SoftBank took ARM public in September and still owns about 930 million shares, that 90% of the chip company stock. ARM had a blockbuster quarter, blowing out analyst expectations for both revenue and earnings. We'll have a look at that. Compared to NVIDIA, is it really that good that justifies the share price? We'll see. The company reported adjusted earnings, adjusted per share of 29 cents, topping the average analyst estimates of 25 cents. And while the company's revenue rose 14% to 824 million, so 14% growth, 14% is the share price here, this huge gain that's happened on the coattails of NVIDIA. 14%, wouldn't we expect more than that? That gets me kind of concerned about the share price. Only seeing the growth of 14%, does it justify this huge jump? ARM's projects revenue growth into the next quarter will be even stronger at 38%. So the guidance, the projections for next quarter is kind of what is anticipated by the share price, I think. But, things can happen. It may not be that. Is the market getting ahead of itself? So this is from Reuters. ARM Holdings jumps over 40% as the staggering AI-powered rally. So there's definitely some euphoria going on here. I think we're getting into euphoria territory. I've just been talking to some people on Twitter who are very bullish on NVIDIA still, even though it's got so high. They're kind of seeming a little bit overconfident, I think, which is another sign of exuberance. Shares of ARM Holdings surged more than 40%, so that's the same thing on Monday. So this is this Monday, adding to the staggering rally fueled by optimism around artificial intelligence. So this is from CNBC. ARM's post-earnings pop leaves stock trading at over 100% premium to NVIDIA. Semiconductor stock NVIDIA and AMD have become Wall Street darlings due to AI, but ARM has quickly joined them. So ARM shares soared Thursday, lifting the company's market cap just past 116 billion. So this reminds me of the EV bubble. Yes, it was a bubble. Remember that? We had Tesla really jumped up, similar to NVIDIA, and then we had other stocks. Investors, speculators were looking around for other stocks. We had Rivian, which was kind of a huge IPO when that happened. That was kind of the peak, I think. We had companies like Neo, and then, Nikola, of course, which was just kind of a fraud. When these bubbles happen, companies get taken along on the coattails and ridden up. Is this what's happening to ARM? The stock now has forward earnings multiple that's more than double NVIDIA's, and we'll check that out. We'll have a look at that. Now, if you don't know yet, I've started the Art of Value Patreon. I'll put a link in the description if you want to go and check that out over there. I talk about stocks that I do own. I don't own ARM, but I talk about the stocks I do own, stocks that I'm researching seriously. But I'll put that link in the description and hopefully see you over there. So here, this is the results summary from the company itself that just came out, and we can see here the highlights. 824 million total revenue, up 14% year on year. 14%. I mean, is that enough to justify what's going on with the share price? To me, it's sort of in the danger zone. Of course, it could go on and on. Stanley Druckenmiller, who is an expert macro trader that's been doing it for 30 or 40 years, he's never had a negative year. That's kind of how good he is, and he can be in and out of things. He's riding the NVIDIA bubble. He says it's a bubble. He says it's in nosebleed territory. This was back when it was 400, and it's gone way up since then. So he's definitely riding the bubble, and he's very experienced at it. But, we've got these other companies that are the same thing is happening too. Is it justified with just 14% revenue growth? There's license and other revenue up 18% here, and 470 million royalty revenue up 11%. Is this really good enough to justify what's going on with the share price? And this is their guidance, which got their market excited. So 850 million to 900 million for Q4 2024. And is this enough? Is it enough? The guidance alone, it hasn't happened yet. These are projected, that they actually haven't happened yet. So there's a lot possibly being pulled forward like it was with EVs. Tesla's down from over 400 to under 200, and it went down close to 100 at one point in 2022. And so let's have a look here. This is GuruFocus. This has got some fundamentals. We can have a quick look here. I haven't got time to dive really deep in, but we can see here the kind of multiples it's trading at and some of the figures. It's important to look into it. We can see that it's trading now at a market cap of 117 and an enterprise value of 114. So not a lot of difference between those. That's kind of good. We can see that the debt to equity is 0.05, which is a good ratio, nothing to worry about there. And we can see the gross margin is 95 here, which is pretty good. That's excellent. Investors will be liking to see that. But the operating margin says negative there, net margin. We can see the FCF margin is 73, and returns on capital here, these figures here, return on invested capital is negative, ROC, return on capital employed is negative. And here we have the growth rank, 3-year revenue growth, 37.7%. Now look at the value rank here, just a sea of red here. We've got the PE ratio of 225 and the forward PE ratio of 81. Now, this company's going to have to perform to justify it, especially if you're buying, recently to get a good return. It can be a good company. I'm not saying this is a bad company at all, because it seems like it does have a bright future. But, is it being pulled forward? Is this price multiple too high? I mean, look at the price to sales ratio of 100 at 181. Is that right? That is huge. We saw this back in early 2021, late 2020, with a lot of emerging tech stocks that got into the situation typified by what ARK invested in. With quality, if we look back in the dot-com bubble, even the quality companies got dragged up. Microsoft was worth $600 billion at the height of the bubble there. It took a long time to become a good investment. People say there are reasons for that, that the management wasn't so good, but the company was doing well. And Amazon too got to a huge valuation. It was a younger company. These valuations got out of whack, and some companies just went away. I'm not saying this is a dot-com bubble, but sometimes good companies get to bubble prices. Is there too much exuberance here, and are we at a risk of a crash? Definitely possibility of this. I couldn't tell when. As Stan Druckenmiller said, these things can go on for a lot longer than you think. I'm not saying it's going to happen tomorrow or next week. This could go on for quite a long time. And traders could be trading in and out of this just like during bubbles. A bit of a risky situation because you've got to get out at the right time. And he said when AI has been going on for about a year, but over a year now, so November, December it's been over a year now. He said that these things can go on for 2 or 3 years, not 1 year, because he has experience of the dot-com bubble. So we'll have to see what happens. It could go on for longer. I'm not warning that it's going to crash, because it may not crash, but it could, or it could just deflate slowly. But these things don't usually play out like that. So we'll have to see what happens with ARM. Let me know what you think about ARM. Do you think that it's going to crash? Is it in a bubble? Is it in danger? Is this AI bubble happening? Is it there's too much exuberance? Let me know in the comments what you think about it. Now, if you're watching this video on YouTube, I'm going to put a link here to a video that YouTube thinks that you in particular should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.